And then to this day, I still do on the weekends and have for 20 years. I do write up a few pages of to keep me in my discipline. Of these are the trades that are set up to do. This is the circumstances under which I will do that, so that it gives me sort of an outline for what to do.
So welcome back everyone to We're sitting down with Jason Shapiro once again. We spoke a few months ago on his trading and how it's going. So Jason, welcome back on the podcast. Good to have you here. Looking forward to discuss your trading these days, how it's going, and a bit about your market wizard story. So welcome back on the podcast.
Good to be back.
Awesome. So tell me a bit of kind of what's been going on since we last spoke. I think it's been a few months. What's new with trading, with other things on your side?
There's nothing really new. It's the same. I've been real slow for whatever reason in my personal trading. I haven't had very many trades at all for the last few months, but I'm just kind of sitting and waiting for the right signals for me to try and take advantage of it. I mean, I think as theoretically a contrarian sort of counter trend person, it's been good that I haven't had many trades because trends have persisted and I haven't been fighting them. So that's an important part of when you do this is not do it when trends are persisting. So I'm happy to just kind of sit and wait and do what I do and wait for the right time.
That's interesting though, because as traders, we want to take trades, we want to be in the market, we want to have a good equity curve, and sometimes like the waiting game is definitely tough than kind of being in the market taking trades.
The waiting game is tough. I mean, for me, I have I always say I have a job to do for my clients. Most people obviously their goal is I just want to make money all the time, and that's fair enough. But I am hired specifically by my clients to produce, yes, positive returns, but in a negatively correlated way. I am not their trend following side. They have people that do that for them. That's not my job. My job is to kind of catch market turns. So if there aren't any market turns that I see, then I have to wait till there are. I'm not just going to keep selling something that's going up just because I want to pick the market turn. I obviously I have a process to do that, and if the process is not there, then I don't do it. And as it turns out, that's been a good thing because the trend following side of things has been crushing it for the last few months, and I haven't really done very much, so I haven't gotten in the way of those trends and lost money. So, for me, if trend following can make a lot of money and I can just be flat, and then trend following can lose and I can make money, then that's how I add value over time as a money manager, and that's what my job is. This is a little bit different than what many people are trying to do. I'm obviously trying to make money, and I don't get paid unless I make money, and I'm trying to make money in a high return over drawdown way, but that has to be done within the fact that I am also trying to be zero to negatively correlated to other strategies. So
people might be wondering this. So how do you spend your time as a trader when you don't place trades? When you're not actively looking for, I mean, you're still looking for trades, but when you don't have to place trades, and you should be in the market.
I'm watching the markets all the time, and I'm reading things, and I'm listening to what people are talking about. I'm trying to build a general psychology, so I'm listening a lot, and I'm reading a lot, and I have a Discord. I spend a lot of time on the Discord talking to the traders on there and hearing their thoughts, and maybe doing some different research stuff if I don't have a lot going on. That type of stuff. Always paying attention. Just because I don't have a trade on, there's always something to learn in the market movements,
I'm sure you see traders who are impatient, who feel that they should be trading more, and I guess the way you do it now is you're more hands-off, or you actually trade when you need to trade, and you don't trade when you don't need to trade. What advice would you tell them to kind of learn to build up that patience, to wait for the right setup?
It's a very difficult thing to do. I think it all comes back down to process. I think everybody should be trading with a process. And because that process should be proven to offer good returns over time. And if that process is not giving you anything, then don't trade. Know that this is a game about overtime, right? And if you have a process that is profitable, then over time you should do well. But if you're going to break process and you're going to do all kinds of funny things, then that's probably going to hurt you over time. And that may not be something you'll know or believe, but in time you will learn that, and in time you will become more patient.
And you don't try to necessarily go into trend following, you really try to stick to your edge. Is there a reason why you don't kind of try to add other styles to your portfolio?
That's not what my job is, I am a money manager for primarily fund of funds companies. They allocate money to trend followers. They allocate money to whatever, long, short equity. They allocate money to whatever they allocate money to. They allocate money to me to do what my job is, which is theoretically to pick major turns in these trends. Because obviously when a major turn happens, that's when all these other people give back money, right? So that's what my job is. So that's what I do. Fortunately, it has made money for me over time as well. Otherwise, I wouldn't do it, right? But that's why I'm not going to get into trend following. That's what other people do. Nobody's going to allocate money to my business as a trend follower. They've got a million trend followers that they can allocate money to, The reason that I have a business is because I can offer this. It's very difficult to find non-correlated return streams to anything. So because I have this non-correlated return stream, that is why people allocate money to me. You can have a negatively correlated return stream to trend following, just do the opposite of everything, right? But that's not going to add any value, right? So because mine has been good at sort of being patient and then catching it at the right time, not all the time, but over time, that's why they allocate money to me. So therefore, that's what I do. I always look at it like, a sports team. Everybody on the team has their job, right? And that's my job. If you're playing keeper in football, as you guys call it, your job is not to score goals. Your job is to save other people trying to score goals, right? You might be able to one time, make a save and dribble the ball all the way down the field and score a goal. But that's not your job, because if you do that, there's going to be a time where you try that and suddenly there's no keeper in the net and the other team's going to get it and kick it in, right? So you have to do your job, and that's how I see what I do. I have to do my job for my clients. That's what they have hired me to do.
If you had to go back in time to when you started trading, how did you come across this specific style of trading you have now? Is it because you've tried everything and then you kind of focus on what you're best at, or how did you come across that style?
Yeah, it was trial and error, trial and error, trial and error. I originally didn't develop this style to be negatively correlated or whatever. I developed this style because I found it's what gives me the best risk rewards over time, as I used to log all my trades and go back and see which ones worked and which ones didn't over periods of time. There are a lot of trades that might have worked one time, but over time they didn't work, right? And as I slowly whittled out the trades that I found didn't work for me over time and kept the ones that did work for me over time, that's how I developed this process. And then as it turned out, being that I'm kind of contrarian anyway, that offered negative return streams, negatively correlated return streams, and then that became what my business was.
Interesting. The cool thing is you see this as a business and not just like trading. Like a lot of people see it as like they place trades, they might make money in the process, but they don't see it as a whole business. So can you explain the difference between like the way you see it as a business versus like just trading?
It is a business. This is how I make my living, and I manage money for other people, and they are my clients. I have to get clients, right? So therefore, and when I tell clients what I do and they agree to allocate money to me to do that, then as a businessman, that's what I have to do, So that's how I see it as a business. For other people, it's not necessarily a business. They're just trying to make money, right? But even within that, I still think it's very important that they have a disciplined process. It doesn't have to be my disciplined process. You know what I mean? be momentum traders or breakout traders or whatever they find works for them. But you still have to stick to that process. So in that way, you have to treat it like a business, even though it might be your personal account or whatever, but it still has to be treated as a business, and you still have to be very disciplined in this for it to succeed over time, because this is a pretty difficult thing to do over time.
Tell me about the mindset of managing capital like this. You trade for clients. I'm sure now you have experiences, maybe it gets easier over time, but in the beginning, do you feel like any kind of pressure for managing other people's capital and kind of trading for them?
I mean, I think there's pressure doing this no matter what you do, whether you're managing other people's money or whether you're managing your own money, right? It's a lot of pressure, right? And within that pressure, I think, is the mother of bad decision making. So you have to fight that consistently. This is a big time battle against oneself, as we know, right? Picking the markets up or down, you know what I mean? You'll get it right sometimes, you'll get it wrong sometimes, but I think it's the internal battle against oneself that is really going to separate the winners from the losers in this game. And that has to be a constant process of learning from your mistakes, and just continually trying to minimize your mistakes. You're going to make them. You'll make them once, you'll make them twice, you'll make them 3 times, you know what I mean? But the quicker you can try to learn from those mistakes and minimize them and focus on the good decision making, obviously, the higher your probability for success.
What are some things you do to find out those mistakes? Do you keep a journal, or do you keep a way to kind of go back on your trades, or how does that work for you?
I did for a very long time. It's not necessarily a thing for me now, because I don't really do anything other than the trades I'm supposed to do, right? And as I've explained, that becomes a little bit easier for me because I'm being judged on, am I doing what I'm supposed to do? So it's very easy for me to do that. But in my first 10, 15 years of trading, when I was just trading, I did keep a journal of all my different trades that I kind of put my trades in as to what type of trade they were. Was this a breakout trade? Was this a counter trend trade? Was this a swing trade? Whatever it was. And I kept all those together so I could then go back and see which ones were working for me. I think that's an important thing to do to help develop a process. And then to this day, I still do on the weekends, and have for 20 years. I do write up a few pages to keep me in my discipline, of these are the trades that are set up to do. This is the circumstances under which I will do that, so that it gives me sort of an outline for what to do, which has now become, that thing that I've done for 20 years has now become the newsletter that I distribute. Yeah, so I still do that religiously every weekend to help me stay within my process.
I talk with a lot of traders who say over time they kind of develop that sort of discretion, that sort of intuition of like what trades are good, what trades are not good. Do you feel like that applies to you too, where you are very mechanical, but you also have this discretion or this kind of intuition on what you should do in the market?
It's pretty mechanical, but I would say within that process, there is some discretion as to how I read certain things, I'm not fighting the tape, right? So I'm looking to short something, for example, that doesn't react well to positive news, right? So you get some positive news, market goes up, and it fails and goes down. I maybe would look to short that. But within that positive news thing, you can argue there's discretion within that, right? Because what was positive news? Like now, what's positive news in the stock market? Is it lack of inflation is the positive news thing? Or is it growth in the economy is the positive news thing? There's a little discretion within how you're reading that.
I'm sure you talk with a lot of traders these days who are newer than you in trading, and they want to get to the level where you're at right now. What are some of the common issues you see these traders face, especially the new guys, the retail traders who want to get to a good level in trading? What kind of issues do they face, in your opinion?
Well, I mean, I think obviously they start with a lack of capital, right? And so therefore they lever because they want to make their small amount of capital into a big amount of capital quickly so that they can just get on with it and be a full-time trader, right? And that's a hard thing to do, you know. It can work. Put some huge trade on, get lucky, suddenly you have a good amount of capital, and now you can go back to trading normal size kind of thing. But I think that's the biggest problem is building up a big enough capital base so that you can be a full-time trader and live off of your trading, right? But, you know, there are places to do that. You know, you can find one of these prop shops or something like that, and that's an easier way to build up your capital, obviously, and a great place to learn as well.
How do you get that capital when you kind of started trading in the very beginning? Did that come from like a job, or how did you fund that?
I mean, when I first started trading, I was working at a normal type of job and just trading my savings. And, you know, I did the same thing, right? I was young. I had a job, so I didn't necessarily have to worry about my expenses so much. And I just started trading, you know, huge size. And I got caught up when I first started in a big bull market. And so I made a bunch of money pretty quickly, which I then turned around and lost pretty quickly as well, you know, which is semi-typical, I think, right? When the bull market ended and I didn't realize it, then, you know, I gave that money back. But, you know, and it just took years. I had to build it back up, and, you know, I took jobs, and, you know, and then really the big difference for me was after a long period, it took, I'm going to guess, somewhere around 20 years, where I finally got to the point where my returns were normal. I got a job as a money manager for a hedge fund, you know, and that offered me salary and all the capital I needed to manage, and staff that could help me with research and all that kind of stuff. And that is really what took me to so-called the next level at that point. But it took me 20 years to get there. You know, I didn't come out of some top college or top MBA school or whatever and just walk into one of these jobs, right? I kind of had to prove my way in, so to speak.
What do you think is the difference from the guys who have these normal returns versus the guys who have these like up and downs, like big up and down, like a lot of roller coaster in the equity curve?
I think sizing, risk management, that type of thing. You know, people who think that that they're going to have some sort of edge in predicting the future, you know, tend to have very up and down returns, because your edge in predicting the future probably isn't an edge. You know, you'll get it right sometimes, and that will make you think that you have an ability to predict the future, and then you'll put on big size, and then you'll get it wrong, and then you'll lose it, you know, and it's up and down. I did that for a good decade, right? Eventually, you come to the conclusion of predicting the future is not really an edge, so how do I find a real edge? You know, and how do I find a real process that's going to take advantage of that edge? You get there eventually, but the people who are much smarter than me get there quicker because they are willing to learn these lessons from other people. People like me and people like most, I think, need to learn for themselves. And the only way to learn from yourself is, unfortunately, to have those really bad periods. I mean, I blew out 3 times before I really got my shit together.
If you had to summarize what's a real edge versus what's not a real edge, like what's not working, how would you describe it? Is it based on the returns, or is it based on something else?
I mean, it's always based on the return. You know, all answers are returns at the end of the day, right? You can't argue with that, right? So if what you're doing continues to work, then to me, you probably have some form of edge, right? But you have to monitor that, right? What are the expectations for that edge, and are they falling within those expectations? You know, no matter what your edge is, you're going to have losing periods. So you have to know, is this my edge going away, or is this just a normal losing period, right? And I think that's all about determining what your expected returns and your expected drawdowns are, and seeing if they are in fact falling within that. And if they're not, then maybe it's time to start thinking about changing it.
Have you even had an edge fall away and like not work anymore?
To this point, I've been trading this one process now for about 23, 24 years. And I haven't really seen it fall out to this point. Knock wood, I haven't seen it fall outside of my expected return ranges. So to me, it's still working, and so I keep doing it.
And I'm assuming that return range is like a buffer on top of like the testing you've done and everything. It's not just like the maximum you've seen in the past. It has a bit of buffer to allow for maybe a slightly bigger kind of drawdown than before, right?
Yeah, I mean, you're always going to have your biggest drawdown at some point, right? But if it were to get like, 50, 60% worse than my expected, it's a combination of both 23 years of real data at this point, right? Plus back testing, but if it were to get, substantially above my expected drawdown, then I would start thinking about something's wrong here.
Do you ever look at like the profits and see the profit as like having a also like a maximum kind of expected profit, or when it goes too high, it's kind of a sign that things will not work after or something, or that the market's doing something different, or no?
I don't argue with better than expected. I mean, it gets in your head, right? And you think, well, I just had a better than expected run, so now I'm probably going to have a worse than expected run coming up, and that may be true. I don't know. I had a better than expected year last year. Not better than expected, but better than average year last year. And now this year, I have nothing to do. I have nothing going on. But it's, the middle of February, you know what I mean? And like I say, it's been good because as a counter trend trader, you'd be getting run over here, So I'm happy at this point to just not be getting run over, to do nothing. So I do think that this year for me will probably be, not probably, but I think that it will be maybe a lower than an average year this year. But that's just based on, like you say, the fact that last year happened to be a much above average year. So I don't know that there's correlation there, but it does obviously get in your head. But maybe it's good for me to think that way so that my expectations are down. So, maybe I can surprise myself to the upside. Who knows?
I think it's definitely a good point you make. It's the fact of like, you gotta wait for the setup, and the guys who want to just be in like trade full time and they have to pay their bills and they want to take trades and like they don't have any trades to take, that pressure can be like very overwhelming and like forcing you to take bad trades or go looking like strategies you don't ever trade or something. But the idea of like sticking to what you already know what you're good at, even if it takes a while to get trades, is definitely the right thing to do. Not the cool thing to do, but definitely the right thing to do in that case.
This has been probably my least active period, I would argue, ever. And it's not easy to sit here and have no trades. This is what I'm supposed to be doing, is putting on trades and making money, right? It's not an easy thing to do. But like I say, it's, as it has turned out, it's been a good thing to do. Amazing how when you stick to your process, if your process is valid and you stick to it, then it ends up being a good thing. It's been a good thing that I haven't had any trades. So, I'll take it.
Would you rather be in a drawdown or doing nothing, which is kind of good point. Yeah.
That's right.
Is there anything we didn't talk about or didn't touch on you want to kind of mention or talk about? Any other point you think is important for people to hear about?
No, I mean, I think those are the important things, know what it is that you're trying to accomplish, and therefore stick to that, and don't. And it doesn't mean you can't do more than one thing. Like you say, I could be running a trend following strategy and a counter trend following strategy. It's not what I do. And therefore I can catch the trend following, and the trend following is working, and then hopefully I can catch the counter trend when the counter trend is working and all that. But that's not what I do. But you could do that, Just know what it is you're doing, right? And be disciplined to doing that.
Is there any reason you stick to just one system, other than just like that's your edge and that's your specialty? Is there any reason why you don't bring in something else to the table?
That's my edge. So that's what I do, and that's also what people hire me to do. So therefore, that's what I do. It's the life I've chosen.
All right, good way to put it for sure. You've got a really good chapter in the Unknown Market Wizards. People can read about you if they want to know more about who you are and what you do. But anywhere else I can find you and connect with you?
I'm on Twitter. I do YouTube videos every weekend. at Crowded Market Report on YouTube. I have a web page, crowdedmarketreport.com.
Awesome. Definitely put the link below the video for people to check it out and connect with you there. And Jason, you do some amazing work for sure. I've seen your videos, I've seen your everything you put out, which is pretty amazing. And I hope you get the most out of it. And we can hopefully catch up pretty soon and discuss more trading. Would be cool.